may respond to the senator from
Absolutely.
West Virginia. First, I'd want to congratulate Senators Manchin and Burr for helping the full Senate understand this issue. This is like a lot of issues we have to face, not simple. I mean, I used to be a college president. I used to be the United States Secretary of Education. I had to re-educate myself on this legislation. I still made some mistakes. I was saying last night, for example, that there were only 2 million subsidized loans. And what I was forgetting was the point that the senator from West Virginia makes, which was 80% of the students who have subsidized loans, the low-income students, also have the unsubsidized loans. So when you only take care of these subsidized loans, you're leaving 7 million students with unsubsidized loans up here hanging high and dry, and nobody's taking care of them. So you're hurting both the middle-income families and the low-income families when you have an incomplete solution. But the question, the senator from West Virginia posed the question, is it right that, let's say I graduate from the University of Tennessee and I've had 2 loans. I've had the subsidized loan, and that means the government's been paying my interest while I'm in college. And typically, if I'm like 4 out of 5 students, I've had a unsubsidized loan, so I've paid that interest. And suddenly the interest rates have gone up for me because, well, the interest rates have gone up to 10%. What I can do is take both those loans, I could take all my government loans at once and turn them into an 8.25% loan. So that's in effect a cap on my loan. And that means, and then I would have the choice, and I would say this back to the senator from West Virginia or North Carolina, when I consolidate my loan at 8.25%, I've heard some senators say, well, that just means the student's going to have to pay a lot of interest because it spreads the loan out over a long period of time. But does not the student have that choice? I mean, isn't it like if you want a 15-year mortgage, you have higher monthly payments, but you pay less interest because you pay it off quick. But
what they're referring to, and it might be misunderstood, Senator, if I may, is that everyone will take the longest period of time. Mm-hmm. I'm understanding, and I think I'm accurate and correct on this, that, okay, I want the smallest payment. I just got out of school, so I want my smallest payment. Now I'm getting better jobs 4 or 5 years out. I got a better job. Instead of paying $150 a month, I can afford to pay $300 or $400 on my... There is no penalty for me to shorten that, as it would be in a conventional market. Is that how you understand it?
The senator would, Madam President, I'd ask consent that the senator from North Carolina and West Virginia and I be permitted to engage in a colloquy for a few minutes.
Without objection.
That's how I understand. I would say to the senator from North Carolina, if I would presume a graduate of the University of North Carolina would be smart enough to make that decision for herself or himself, wouldn't you think?
Well, I think they would. I think one of the agreements that we came to was that students ought to be in control of their decisions about their loan rate based upon what was available to them. And if a student goes through the next 4 years and they have a combined interest rate of about 4.5% for the life of the loan, why in the world would they be excited at an 8.25? If for some reason 10 years from now somebody got out of school and their combined interest rate was 9%, we give them the option of going back to 8.25. And I think the senator from West Virginia made an extremely good point. For the most subsidized student, they can only borrow $3,500 that's subsidized.
Is that wrong?
So you think of the institutions that are out there, none of them have an annual tuition of $3,500. We know that they're going to borrow out of the 6.8% pot. What we're offering is that the pots are the same, and that the subsidy is that for students that qualify for the subsidy, they're not responsible for the interest rate while they're in school. That subsidy still exists. It's just we're not overcharging one group, and we're certainly not overcharging the ones we just subsidized because they've got to borrow more money to complete their college education.
My friends, let me just say that I graduate now, no matter what the interest rates are, no matter what they might have been. I graduate, and economic times are tough. I find a job, it's not what I think I my value is, but I find a job at $40,000. And $40,000, I'm married now and I have a child or two. Don't we have in our bill a protection which has been in place for a long time? Both Democrats and Republicans have supported this protection, which is called income-based repayment. I'm only, by law, I can only pay 15% of my disposable income, and I think that breaks down to my payment can only be $142. $142, and so isn't that a subsidy too? Or wouldn't we be subsidizing that to a certain extent? And I'm also understanding if my economic condition doesn't improve, and that's all I pay, by the end of 25 years, it's exonerated. I pay nothing. I'm done.
If I could respond to the senator, the answer is yes to that. Not only is there, I think it's fair to say that the consolidation option that a student has in case the rates go up at 8.25% can be called a cap. Not a hard cap, but it's a cap. And a second cap is this income repayment provision that you speak of. If you're making $40,000 a year, after they apply the formula, you probably aren't spending more than about 10% of your income. It's something called disposable income that you can be required to pay on your student loan, and that continues for about 20 years. And if at the end of 20 years you haven't paid it off, the loan is forgiven. So any student who has a loan has that opportunity. They can consolidate at 8.25%, and income repayment limits the amount they have to pay each year. So they have that. And then one of the things I noticed about the Manchin-Burr bill that I'd like to ask the senators to talk about a little bit is that you've come up with a really, what I'm beginning to understand as I study this more and more, is a very significant contribution. The idea that all of the undergraduate student loans, which as I understand it are about 2 out of 3 of the loans, ought to have the same interest rate. It's confusing the way it is now. But the other reason is about 80% of the people who have subsidized loans, low-income students, also have unsubsidized loans. And so your contribution is to say, let's simplify it, provide certainty over a long period of time, and treat all undergraduates the same. Otherwise, it seems to me, you're leaving 7 million middle-income students who have unsubsidized loans high and dry, and the 80% of the low-income students who also have these unsubsidized loans, you're not helping them either. So I wonder if you could comment on this idea. And I notice without a cap, you're able to get the interest rate for all undergraduates' loans down to about 3.66%, which is a pretty low rate.
Let me just